Gold miners are finally starting to move as the metal hits fresh all-time highs. Peter Grosskopf is chairman of SCP Resource Finance and former head of Sprott. Peter, welcome back to Kitco.
Thanks, and thanks for having me.
So, Peter, I see that the gold miner index has jumped 16% in the past month. So has the market finally woken up to these high precious metal prices?
Definitely led by the big caps. Yeah, the small caps just started to react in the last day or two, but coming out of a long, cold stretch there for small cap mining equities.
Now, in another interview, you speculated that inflation and margin compression could have been holding back the miners.
Yes, I still think that's the case. Miners have put up with some difficult operating conditions from an inflation perspective. Projects are taking longer, they're more expensive to build, and it took a while for both companies and their shareholders to digest what margins would be in this kind of environment.
Now, in another interview, and let's just stick with the senior miners here, in another interview said that, quote, the groundwork has been laid for more consolidation in the space. Obviously, the big move last year was number one, Newmont taking out Newcrest. This month, we also saw Alamos take out Argonaut for $325 million.
Yeah, and I think that's going to continue to be the case. In fact, I think we're just getting started. Deals in the mining space are difficult to consummate. There's technical risks that need to be assessed and are always changing. And then there's personalities as well. So those aspects are still going to be challenges, but there's an underlying, very compelling logic to putting mines together now, and that is larger miners enjoy an unbelievably lower cost of capital than the small caps. In fact, you might argue small caps have been devoid of capital for the last couple of years. They've just not been able to raise large amounts of money.
Now, expand on that. If you're somebody that you're seeing that your stock prices are going up and that we're in a good gold environment, is that going to be less likely to catalyze some of these M&A actions? Or are we just, as you say, again, there's going to be more easier access to capital, so that should favor that there should be more M&A?
I think it's not going to change. The underlying rationale that I mentioned, the cost of capital, the fact that a larger mining company can field a greater team of experts to handle the environment and labor and everything else that they need to in this environment. Those deals are being looked at. They're being looked at for the underlying logic of putting these industrial complexes together. And I don't think that's going to change whether the markets are going up or down.
Now, you mentioned that the large miners are moving. Could we talk about the rest of the sector, though, Peter? How are the development and exploration companies look? They've had a bad couple of months.
Well, I've been in the business for 35 years, and I can truthfully say there's not very many months that were as bad as November and December. I think the juniors were literally no bid during that time, and it is coming back now. So you see, just in the last 4 or 5 trading days, a lot of offers have been lifted and bids have been increased. So you're getting these stocks jumping by 10 or 20% all of a sudden. That's usually a technical sign that it's game on again. You've got the momentum money moving from the large caps now back into the small caps, which are unbelievably well valued and discounted compared to anything else in the market right now.
Peter, let's turn to critical minerals and your vantage point from SCP. Are you metal agnostic in this environment, or are there metals that you're avoiding at critical minerals?
Well, in SCP, we are a mining boutique, so we cover all minerals, and there have been great interest in decarbonization minerals. It's a growing industry, and it's going to be here for a long time in growth mode.
Now, the one thesis that keeps coming up again is that everybody loves copper, but what the real hurdle for this is that the capex on these projects is just huge, and we really need to see a lock-in for better prices for copper.
Yeah, that's true. I guess what they call the incentive price needs to be very strong in copper to develop new mines. And you're starting to see the market reacting now where the economy and especially China have actually been a little bit slow in terms of offtake, but there's just not enough copper to go around. So investors are clamoring for it. It's very hard to start new mines in copper. They're long mine life, as you say, very high capex. So it's an area where I would say there's not a lot of choice, and investors are running after that now.
Peter, can you charge a premium if your project is green? So we have Canada, and there's been development projects that have been in throughout the prairies in BC and Quebec that have been trumpeting that they're tied in with hydroelectric grids. Therefore, with electrification, they're going to be producing less CO2. But we've also seen the trouble that the industry has been having competing against Indonesia, which arguably has dirtier nickel. Is there a green premium out there or no?
I think I'd split the question into two parts. The first is shareholders. Shareholders do care about carbon footprint. And companies are striving all the time to be the best they can, best citizens they can in terms of carbon footprint. In terms of the customers for the metal, we've yet to see, for instance, the auto industry go out and offer to pay premiums. They're out there to procure the metal as cheaply as they can. So we saw some action on the LNE, where nickel producers were complaining they should be pricing their product differently, and there wasn't a lot of uptake yet. I do expect it to come.
Now, the U.S. government has been providing a lot of financing help for the critical space. We saw the recent announcement around MP Materials, that $58 million grant. There was also Lithium Americas, which received over $2 billion from the U.S. government. Are we building a critical mineral industry in North America?
Slowly but surely. We haven't been as aggressive as either Australia or Europe on that front, but I think in particular with the US, they're starting to cast a global eye on how they can build their own supply chains into critical minerals. So I do expect government to be an increasing factor in North America over the next couple of years.
Let's finish with gold, Peter. What's your top thesis for gold prices going higher?
Well, there's just too much debt in the world. Governments have built up these deficits and debts to the point where they actually do matter. And over the last couple of years, it's been a bit calm and complacent. But the sheer size of the U.S. fiscal deficit now, and whether or not they have control over that, is starting to trouble investors. Investors are adding gold as a hedge to that. And I think the thesis is still, you have two choices to get out of this debt predicament. One of them is to deflate and face a financial crisis, which I don't think anybody expects. And the other one is to inflate. And gold holds its own, and it's been showing to hold its own even in an environment of rising rates in that kind of a world where deficits and debts are just too big.
Peter, thanks for your time.
Thank you.
My name is Michael McRae. You're watching Kitco Mining.